I'm going to start, in fact, not with what he said at that event, but a very key data point that has emerged. It's effectively the fallout of Trump's policies during the first 100 days in office. And that is the fact that US trade deficit has spiked 9.6% to 162 billion in the first quarter. The deficit has soared because companies have rushed, understandably, to import more goods ahead of the imposition of tariffs. In fact, goods imports have risen $16.3 billion to an all-time high of $343 billion. Consumer goods imports have risen as much as 27.5%. Why is this important? Imports are a subtraction in the calculation of GDP, and the record high imports are likely to sharply drop the US GDP growth in the first quarter. And Goldman Sachs, among several others, has already seen a GDP contraction of 0.8% in the first quarter compared with a 2.4% growth in the previous quarter. The advanced estimate of that Q1 GDP will be published later today, so expect Wall Street to react to it. Now, yesterday, overnight, you had an easing further of trade tensions. In fact, you had Donald Trump saying that a deal is around the corner. He said that the US is very close to a deal with India. Listen in.
India is coming along great. I think we'll have a deal with India. The Prime Minister, as you know, was here 3 weeks ago, and they want to make a deal. We'll see what happens. Thank you. Thank you.
All right, so that's one positive, and certainly it is a positive for us here in India as well. But there's more. Treasury Secretary Besant made a similar statement. He said that there are substantial talks that were also held with Japan. The contours of a deal with South Korea could be coming together. And Commerce Secretary Howard Lutnick said that one deal was close to be done, but he refused to disclose which country that he was talking about. He said that the country's prime minister and the parliament would first need to approve that deal. What else happened? Auto tariffs are being softened. In fact, there was a Trump proclamation that offered to offset a portion of the tariffs on auto parts. Listen in.
And to help these automakers bring their factories home as rapidly as possible, I've just signed an executive order to give partial tariff rebates to any company that assembles its cars right here in the U.S. In other words, if they can't make it in time because they have to do it here, otherwise they haven't, I'm giving them a little bit of a break, right? They took in parts from all over the world. I don't want that. I want them to make their parts here. But I gave them a little bit of time. It's 15% and then 10% of the parts, so it's not so bad.
Okay, not so bad, 15% and 10%. Let's explain what that means for you and the implications possibly for Indian auto component manufacturers. The offset aims at giving automakers a little more time to shift their supply chains to the US. That is, of course, the intention of the tariffs, saying manufacture and make in the US. Car makers will be provided credits for 15% of the value of vehicles assembled domestically. In the second year, that credit will fall to 10%. Now, what does this mean? Take an illustration. If a car maker builds a car with 85% of US localization, there will be no tariffs owed in the first year. If the car maker, however, builds a car with 50% localization, a 25% tariff is applied to 35% of the value. Basically, 15% of a break is provided to them. What happened overnight? Very quickly, the Dow has risen, so has the S&P 500 and the Nasdaq all gained in trade yesterday. The S&P 500, in fact, rising for a sixth day, posting its highest close since Liberation Day, and the VIX has fallen below 24 for the first time since that event. US yields have fallen to a 3-week low, and you have the 10-year that is now at 4.16. The dollar index, however, remains close to 99. Brent has fallen overnight but has recovered somewhat to about 63, and US futures currently are in the red. So let's see how that pans out. For now, Asia Pacific is also opened a little mixed with more losers than gainers, and the indicative open, I think, is going to be in the red for the Indian market as well.